The city hums with the familiar rhythm of a Friday evening. You pull out your smartphone not to make a call, but to summon a chariot. With just a few taps on a ride-sharing app, you've requested a car. The app already knows who you are. It knows your saved credit card details. It knows your destination. There's no fumbling for cash, no swiping a card in a clunky terminal at the end of the journey. The payment happens silently, frictionlessly in the background. You simply get out of the car, say thank you, and walk away. The entire financial transaction was a ghost. A whisper in the digital wind, completely integrated into the experience of getting from point A to point B. This small, almost trivial daily ritual is the front line of a global financial revolution. It's a revolution not of towering bank headquarters or shouting traders on a stock exchange floor, but of software, data, and seamless integration. The bank, in this instance, wasn't a place you visited. It was a service embedded so deeply into the app that it became invisible. You didn't think about authorizing a payment, transferring funds, or waiting for a settlement. The technology handled it all, allowing you to focus on the outcome you desired, a safe and efficient ride home. This is the new world of finance, one that lives inside the applications you use every single day. What you just experienced is more than just convenience. It represents a fundamental shift in how we interact with money and financial services. For decades, banking was a destination. Now banking is becoming a utility, like electricity or water, flowing silently behind the scenes to power the experiences we want. Finance is no longer the main event, it's the supporting act. People don't want to do banking, they want to live their lives. It's a quiet revolution, but its impact is anything but. So what is this powerful force operating behind the scenes? It's called embedded finance. In the simplest terms, embedded finance is the integration of financial services, payments, lending, insurance, directly into the products and apps of non-financial companies. It's about putting the bank inside the brands and platforms you already trust and use daily. Think of it like this. In the old world, if you wanted to buy a couch, you might go to a furniture store. If you couldn't afford it outright, you'd then have to go to a bank, apply for a personal loan, wait for approval, get the money, and then go back to the store to make the purchase. It was a multi-step, cumbersome process involving different companies and locations. With embedded finance, you are on the furniture store's website, you see the couch you love, and right there on the checkout page, you are offered the option to pay in 4 installments. You click a button, get instant approval, and complete the purchase. This model fundamentally changes the distribution of financial products. Now, any company with a strong customer relationship, a retailer, a ride-sharing giant, a software platform, or a social media app, can become a channel for financial services. They have the context of your life. The ride-sharing app knows you're a driver who needs a car. The magic behind embedded finance lies in APIs, or application programming interfaces. These are like secure digital messengers that allow different software systems to talk to each other. This creates a symbiotic relationship. The bank gains access to a massive new customer base. The retailer enhances its customer experience and opens new revenue streams, and you, the customer, get a seamless, integrated service. The theory of embedded finance is compelling, but its real power is visible in everyday applications that millions of people now take for granted. Let's start with one of the most powerful examples: instant driver payouts. For years, gig economy workers, Uber drivers, Lyft drivers had to wait for weekly payments or bi-weekly payments to hit their bank accounts. They completed the work today but wouldn't see the money for days. This created a cash flow problem for people who rely on that income for daily expenses. Embedded finance, combined with real-time payment networks, changed the game. Now, a driver can choose to cash out instantly, transferring the money to a debit card, transferring the money to a digital wallet within seconds of finishing their last ride. This isn't just about speed, it's about financial stability. For a driver needing to buy gas to keep working, or pay for an unexpected bill, instant access to their earned wages is a lifeline. Another pervasive example is the explosion of buy now, pay later services at online checkouts. Klarna, Afterpay, Affirm. When you're about to buy a new pair of sneakers or a laptop, you see an option to split the cost into several interest-free payments. With just a few clicks, and without leaving the retailer's website, you get an instant lending decision. The reach of embedded finance extends even further, into areas like insurance. When you book a flight online, you're often prompted with a simple checkbox: add travel insurance for $15. Similarly, when you buy a new smartphone from a tech company's website, you might be offered device protection. This seamless integration removes the friction of having to seek out an insurance policy separately and creating a new line of revenue for the company selling the primary product. Embedded finance provides the what, the lending, insurance, payment service, but the how, the instantaneous movement of money is powered by real-time payment rails. For most of modern banking history, moving money has been surprisingly slow. Traditional systems like ACH operate in batches. Payments are processed together at set times. A bank transfer on a Friday night might not arrive until Monday or Tuesday. The money sits in a queue. Old infrastructure is being replaced by new, instant payment rails, built to be instant and available 24/7, 365, and data-rich. They process each transaction individually and immediately. Funds are debited from your account and credited to the recipient within seconds, even on holidays. The transaction is final and irrevocable. These rails use simple identifiers: phone number, email address, national ID. Sending money is as easy as sending a text. They're low cost or even free for consumers, which boosts adoption and removes barriers. This mix enables services like Uber's instant payouts. Over 70 countries have implemented real-time rails. United States, RTP network, FedNow service. United Kingdom, faster payment service. Europe, SEPA, instant credit transfer. But the most transformative examples are in emerging markets. Nowhere is the power of real-time payments more evident than in India. Back in 2016, NPCI launched the Unified Payments Interface, UPI. This wasn't just another payment system, it was visionary digital public infrastructure. UPI is mobile-first and real-time, lets users instantly transfer between bank accounts using a virtual payment address. It looks like an email address, for example, your name at bank. UPI sits on top of existing bank accounts, creating a universal layer allowing any app to initiate payments if it follows UPI. The design was genius. It didn't replace banks, it pushed them to open up via APIs. Google Pay, PhonePe, Paytm. A user with an SBI account uses Google Pay to send money. Friend receives via PhonePe with an HDFC account. The system is seamless and app/bank agnostic, unleashing massive innovation. The impact has been breathtaking. UPI now processes billions of transactions every month. Hundreds of millions entered the formal digital economy for the first time. Street vendors, rickshaw drivers, small shop owners can now accept instant, near-zero-cost payments via QR codes. Transactions became more efficient and secure and created a digital footprint, transaction history used to access credit. UPI's success is a global lesson. When governments build open, interoperable, low-cost public infrastructure, innovation flourishes. It democratizes payments, shifting power to consumers and developers. You can transform an economy of over 1 billion people from cash-dominated to digital leader in under a decade. UPI is an engine for economic empowerment, a model for a 21st century digital economy. Half a world away from India, another real-time payments revolution was taking shape. In late 2020, the Central Bank of Brazil launched PIX. Like UPI, PIX is an instant payment platform that allows for free, 24/7 transfers between people, companies, the government. Before PIX, Brazil's financial system relied on expensive and slow bank transfers known as TED and DOC. These services were inaccessible to a large portion of the population. Tens of millions of Brazilians were unbanked, underbanked, and relied almost entirely on physical cash for day-to-day transactions. The Central Bank of Brazil pushed for change. PIX was their bold answer. The central bank mandated that institutions with over 500,000 active accounts integrate with PIX. That ensured immediate, widespread availability from day one. Users can register PIX keys, simple aliases for bank accounts like UPI. Keys can be a phone number, an email address, or a personal tax ID number, CPF. That simplicity was crucial. Instead of needing a recipient's bank, branch, and account number, a sender only needs a phone number or to scan a QR code to make an instant payment. Adoption of PIX outpaced UPI. There was huge pent-up demand. Within its first year, over 100 million people, nearly half the country, registered for PIX. PIX became the most popular transfer method, surpassing credit cards, debit cards, and traditional bank transfers. Small business owners, informal workers, and everyday citizens embraced it wholeheartedly. Aceitamos PX signs appeared everywhere. High-end boutiques in Sao Paulo, beachside vendors in Rio de Janeiro. The social impact has been profound. PX accelerated financial inclusion, bringing millions into the formal banking system. The true measure of these technologies isn't in the transaction volumes or the corporate valuations, it's in the human stories of those whose lives have been changed. Consider Maria, a craftswoman in a small town in northeast Brazil. For years, she sold her handmade jewelry at local markets, relying solely on cash. This meant she was a frequent target for theft, and had no way to sell to customers from other cities who discovered her work online. When PIX launched, a local digital bank helped her open her first ever bank account for free. She printed a simple QR code and placed it on her market stall. Now customers can pay instantly with their phones, and she feels safer without carrying large amounts of cash. Even more importantly, she can now sell her products across Brazil. Now let's travel back to India and meet Rajesh, a rickshaw driver in Delhi. His daily income is volatile, dependent on the number of fares he gets. Before UPI, he dealt only in cash. This meant he had to carry a lot of change, argue with customers over exact amounts, and often lose out on fares from tourists who didn't have local currency. After downloading a UPI-enabled app, he placed a QR code on the back of his driver's seat. Now a majority of his customers pay digitally. The money is in his account before the customer has even fully exited his rickshaw. This instant access to his earnings has changed how he manages his finances. One afternoon his rickshaw had a flat tire, but now he used the UPI balance he had earned that morning to pay the mechanic instantly. The journey into a world of instant embedded finance is still in its early stages. What we are seeing today is just the first wave of a much larger tsunami of change that will redefine banking and commerce in the coming decade. As real-time payment rails become ubiquitous in every major economy, the very concept of waiting for money will begin to feel archaic. The next frontier is programmable money and smarter payments. Imagine a future where payments are not just instant but intelligent. Your car could automatically pay for parking the moment you enter a garage and pay for charging the moment you plug it in, with the transactions tied directly to your car's digital identity. A business could set up a real-time payroll where employees are paid by the second for the work they are performing, streaming their wages directly into their digital wallets. This will also lead to a hyper-personalization of financial services. With your consent, the data generated from your real-time transactions will allow providers to offer you products that are perfectly tailored to your life. This future is not without its challenges. Questions around data privacy, security, and algorithmic bias must be addressed with robust regulation and ethical design. But the direction of travel is clear. We are moving away from a world where banking is a place you go, and toward a world where banking is a smart, embedded utility that supports you in your daily life. The future of banking is no longer about the bank, it's about you,